Now we are joined by Amit Ramchandani, MD and CEO of Motilal Oswal Investment Banking. Amit, good afternoon and welcome to the show. My first question coming to you is, what is your read with what's happening with regards to markets? Because last week plus today, I mean, the uptick has continued. You are seeing some bit of profit booking that's coming in at higher levels. The clear strategy that everyone was alluding to was buy on dips, sell on rise, and don't be greedy. What would you have to say with the current market texture?
No, I think bounce back was due. Mutual funds and other market participants were sitting on good cash, and towards the year end, we see deployment. So clearly, that has come through. We've seen a rise of about 10% in the last week or so, and at least till the year end, we feel that you will continue to see this momentum. However, for the next 2 to 3 months, one would see some bit of consolidation, which would also include a time correction, not necessarily a dip in the prices. And post that, one can hope that indexes would sort of continue the positive momentum. Also, encouraging sign has been some bit of FII buying. So last 3 days, we've seen a good amount of FII buying come back to the markets.
Right. So, Amit, when you talk about the FI buying, that has come back as well, and I think that is what is providing us that kind of positive momentum. And usually the trend is when the FIs come, it's the BFSI as well as the IT space which goes berserk, right? Though IT, not a lot of people are positive on taking into consideration the kind of job cuts, the discretionary spends which are on a downtick in the global markets. If the FIs are back, first is, do you think they're back for good right now, or do you think this is just knee jerk? And secondly, where do you think they're parking?
So, I think if you look at the favorite sector that we are seeing some momentum build up, and we feel that banking and NBFCs are going to do extremely well from here on. That's a sector where you're seeing disproportionate amount of interest, whether from locals or from FIs. In fact, after about a month or so, we saw 4 deals open yesterday, and 3 of them are in the banking sector. So next year specifically is going to be the year for financials, private banks and NBFCs, where you will see huge amount of primary raises come in, and also enough secondary market interest.
Right. Amit, hi, this is Varsha here. Welcome to the show. I just wanted to ask about considering the market situation.
Hi, Varsha.
Considering the market situation, what are the sectors that you are bullish on for, say next 2 to 3 years? Where do you see the most growth coming in?
Sure. No, so as I said, extremely bullish on NBFCs, private sector banks, and financials as a group. Right. We feel this year again you should see out of the total fundraise about 35 to 40% fundraise happening from this sector. We are also bullish on some of the tech and the digital stories, which had otherwise not done well. I think consumption is the third sector, specifically premiumization stories are clearly going to lead this leg of growth in markets.
Right. Amit, considering the tariff situation that we have, how are you taking this? Because today also, Trump had announced that the next tariff that they are focusing on is on automobiles and pharmaceuticals. So overall, considering the tariff scenario, how are you taking this, announcement, and how do you see this going ahead on a long-term basis?
Sure. No, so on a long-term basis, we are clearly going to be a beneficiary of tariffs, whether it is China +1 or other. So previously we saw China sort of leading the exports to US, and you also had a few other countries who were doing that. But with tariffs coming in, we feel that we will be a beneficiary, specifically in sectors like chemicals, EMS, and of course, auto anch has always been one of the sectors that we were extremely strong in. And the way Indian government has been speaking and negotiating with the Trump administration, we are confident that in the longer run, it's going to be extremely beneficial of India, and you will see some of the largest companies being created in these sectors in the following years.
Right. Amit, from the space that you track closely, how are you viewing this entire fundraising space? I mean, what are you getting from the markets? One is on the IPO side, and one is probably even in the unlisted space. Is it become an easy task to raise funds, or do you think people are now waiting out, taking into consideration that the valuations have dipped quite a bit?
Sure. No, so I think on the IPO, in the IPO markets, we've seen almost 3x rise in the money that was raised. So we would have raised about 1,60,000 odd crores in this financial year, FY25, compared to about 60 odd thousand crores last year. Even in the QIPs, where listed companies use this route to raise money, we've seen almost a 2x increase from 70,000 to maybe 1,35,000 crores, right? The number of deals has also gone up significantly. The average sizes for the deals for IPOs have gone up to about 2,000 crores, and for QIPs to about 1,500 crores. Even if you were to look at our global share, right, the Indian IPOs contributed about 30% to the global share in CY24 compared to that of 17% in CY23. So no matter how you look at it, the primary activities continue to flourish, and we are hopeful that this trend will continue, right? Even when we were seeing a downturn in markets, you saw a few deals happen, and with the current rise, yesterday we saw 4 QIPs being launched. Typically, you would see the primary activity pick up with QIPs and then go to unlisted space, which is the IPOs. Extremely bullish and hopeful that this trend is likely to continue. Even if you were to look at the documents that are pending with SEBI, right? Today, about 115 odd unfiled filed documents are there with SEBI, out of which 49 documents have got approval and another 68 documents are awaiting approval, which means you have a pipeline of about 115 odd issuances that is already there for next year, compared to 78 issuances that were completed in FY24. So all indications are that FY25. So all indications are that the primary market activity is likely to continue.
Right. Amit, so, considering the current situation, do you still think the mid caps and small caps, do you feel that more, still they are overvalued and more dip can be seen when it comes to mid cap and small caps, and, investors should stick to large caps?
So, whenever markets recover from a fall, right, large caps are the first ones to sort of move, and then you see the mid caps and small caps sort of pick up. While there has been some bit of correction in mid caps and small caps, overall, I think we still find the broader mid cap and small cap to be still overvalued. So one would see some bit of time correction and in the next 4-5 months for people to come back to the space. However, we've always believed small caps and mid caps are the ones that give you the actual growth, and your bet should always be stock specific. Even in these markets, people are able to get their stocks, and we are seeing good amount of bets coming in. Yesterday we launched Restaurant Brands Asia, which is Burger King, QIP, and we have seen good demand come through for it as well. So I mean, rather than being more generistic on small caps and mid caps, we feel stock specific ideas would continue to do well, and this is the space which gives you that multi-baggers where you can make money in the long term.
Absolutely. I mean, stock-specific action is the key at this current juncture with the kind of up move that you're seeing. But there is no, confirmation whether the upcycle is going to continue or not. But thank you so much, Amit, for speaking to us at NDTV Profit.